Hello dear traders, happy Saturday. Today is the 9th of September. It's time for our weekly MK summary, as we do it every weekend, looking at the analysis and predictions of the previous week. Here we go, Euro dollar on the 4th of September. What's going on here? The market is full of dumb money. Longies above the price, we have longies. Below the price, we have the long-term stops, and we see expanding buy activity on the dumb money side. So therefore, Euro dollar is bearish, and the bias overall is bearish. So what's happening on the 5th, the next day? Boom. The algos push Euro dollar down below the low against the longies, going for the stops. You see nicely here on the day chart how they clear the moving average and they pull all the dumb money buyers into drawdown and loss. Then on the 6th, we have some US news items, but the market then goes flat over 10 hours and then attacks the lows. Finally on the 8th, some shorties coming in, so they're doing a little pullback up against those dumb money sellers, taking them out, but then shortly after, again longies come in, so they go for the low and push Euro dollar down against the longies. This is how forex works, and the market causality, the MK web, captures that for you. Okay, the similar thing can be seen in cable as so often. So here we first also have like longies in the market, and of course those longies need to get kicked out. So the algos push cable down, they clear the low, they go down against the dumb money buyers, killing them. Same thing until the 8th, where they do a little pullback. However, you see here on the day chart, they want to clear the moving average on the day chart. So with the longies in the market, of course, they want to push down as predicted. Yeah, boom, and this is exactly what was happening. Not difficult to predict once you saw all the time frames. Euro pound. So a little bit more complex, but let's go through it step by step. So first it looked quite bearish on the 5th here. We have longies in the market, so they pushed the market down against the longies. But then with an MTS above the price and some shorties, so pull back up towards the inner range MTS, the medium term stop accumulation. Nice long trade there towards the target. They take the target with precision, they overshoot a little bit and then come back down. Australian dollar, MTS below the price, we know they're gonna take it out. Boom, move down against the longies. Beautiful trade, one of the best. So also dollar strength there because of the dumb money longies. That's the only reason. Then at the end of the week, some shorties coming, so Aussie doing a pullback, but in the end still the longies are dominating there. Kiwi dollar, we predicted here on the 4th, reversal down against the longies. Very cool prediction, one of the best trades. And what happens on the 5th? Boom, the trade is bringing pips. Great prediction, great trade. Easy also. You see how the market gets easier again after the last 2 weeks. Kiwi, open option strike target then, and I traded towards it, okay. Beautiful trade. Some longies left the market there. Dollar cut, it continued this attack against the dumb money shorties, against the red bars, going up, doing some kind of gray pattern, clearing this zone on the higher time frames, and then I stayed away, looked a bit neutral after that. Dollar yen, as it was predicted already last week, went up further against the dumb money shorties, clearing the high, taking out long-term stops. The usual dynamics at work. It's amazing how in every single forex market we see these dynamics. This is how this works. It's not just some situation or moment where these things happen. This is how the machine works, okay? And all the stuff which is popular these days is completely misleading, and I will make separate videos about that in the future. You will see what I mean. So yeah, at some point then we have some open OSTs, option strike targets. The market loses momentum, some shorties leaving. So looks like there's a bit of a switch going on. But for now the market is still complex and we are not just placing trades there randomly. That's not what we do. Pound yen, beautiful MTS run to the upside. Then going down after the MTS run, taking the lower MTS on the 5th, going back up, the market playing Pac-Man there, taking the lower MTS the next day. But overall you see here on the Friday day chart, the longies are in there, some kind of dumb money switches going on. The market can come off during the next weeks if longies come in. Yeah, so you can take this one, but then it looks overall rather bearish. Unless, of course, some shorties refuel the squeeze, but there are no signs of that right now. Euro yen, similar thing. Beautiful long trade there. One of my favorites as well. Not difficult. It didn't really take the stop by the pip, so that's why often I place my target before. On the 30-minute, it took both, but on the 1 hour, it could still come a little higher and take this one also. That's the theme for next week. Euro Aussie. Shorties came in, did a classical 4-hour reversal up, then went down to take the MTS. Okay, beautiful short trade there by the pip and then doing a pullback. Look at the precision. Pound Aussie. So on the 5th, option strike target, move towards it. Then MTS below the price. Move towards the MTS, taking it out, and again MTS above the price, long trade there. Gold, as predicted, longies came in, so it did a 4 reversal down after this house lean, going down against the longies. Notice the switch from longies to shorties on the down money side. So of course they're going down not only to the middle but all the way to the opposite band, doing a little pullback once they arrived. So the metals came down, which makes a lot of sense. Similar to silver, for our reversal down against the dumb money longies there. Cheap entry, look, and going in an exaggerated fashion below the low, doing some kind of reverse grail pattern, taking those stops. Not difficult, we've seen those things so many times now. On the lower time frame, filling both option strike targets against the longies. If you have longies and then you have option strike targets in this direction down, of course that's a powerful combination. Beautiful short trade. Yeah, look how nicely without a pullback. Amazing. Okay. Interesting also Bitcoin with an MTS above the price. So what do? They go up, take those MTS, boom, boom, and go straight down against the longies after. So yeah, case closed. I mean, it's amazing how we have a whole library now of those scenarios over many weeks in all the pairs, all time frames. You see how the dynamics unfold, how they prioritize. It's exactly as described in the market causality. It's exactly as described in the video course also, and we have a nice collection of scenarios. It's not difficult to predict price moves. As I've demonstrated here, okay, find a trader who did all the things I'm doing here, you won't find any, okay? They talk in general terms about price charts and whatnot, naked price charts. You can't possibly derive anything significant and certainly not anything consistent from a naked price chart. You need to understand where are the positions, where are the stops, where are the orders. That's what counts, all right? Anyways, no new information here, just a demonstration of how this can be implemented by a causality trader. Wherever you are on your journey, whether you're a beginner or you're more experienced, keep on working on this. You see how this enriches your trading with leading information. This is a complete different level. You can't compare this to any price-based indicator which is lagging or whipsawing or repainting or doesn't really have any predictive power. Okay, lots of love, have a fantastic week, and goodbye.